Hey everyone, Kaveh Sartipi here with Mason McDuffie Mortgage. I hope you guys are doing well. Hope you are safe and you are healthy. Wanted to reach back out to you guys with a quick update as far as what happened last week in the mortgage markets and what we're kind of looking at, seeing what's going on today and what we might be expecting this week. First off, last time we spoke, the Fed had just recently cut the Fed funds rate by 1%. We had gotten a lot of calls and inquiries in regarding what does that mean to mortgage rates? Does that mean that your interest rate is now 1% lower? What does it all mean? So I wanted to share with you guys what happened last week and kind of where we are today. So if we take a look here at the charts, this was last Monday right here, this green little box right here. And what that shows you is that the mortgage markets did improve during that first Monday of trading. So that was a good thing that we saw. Mortgage rates were improving after the Fed announcement. Now, if you look at the next couple of days here, as you see, both on Tuesday, Wednesday, and then Thursday, we actually lost everything that we had gained on Monday and had lost more than what we had seen over the last several weeks in itself. So the markets did actually end up going higher throughout the week. Now, on Friday, we did see a price improvement, or at least in the mortgage-backed security market. Pretty solid move that we had on Friday. And then today, as you can see, we are improving again today as well. And as of right now, around 11:30, we are up 138 basis points. So pretty solid move so far today. Now, what happened today and why are we seeing that? First off, the Fed came out and essentially announced that they are not putting a cap as far as what they're going to buy to help stabilize the market. So they have announced that they're going to be buying $75 billion a day in treasuries and $50 billion a day in mortgage-backed securities. So they're going to be doing that all this week and hopefully try to stabilize the markets a little bit here and calm what everybody is kind of seeing as the fear that they have in the market. Now, as we're seeing the mortgage markets improve, we're not seeing that passed on to the consumers. And there's a couple of reasons why. Number one, Goldman Sachs came out late last week saying that because of the shelter in place that we're seeing across the country, that is going to have an effect on jobs. It's going to have effect on the amount of jobless claims that we're going to have. And they're anticipating that there will be over 2 million jobless claims filed this Thursday. That is what they are anticipating. So there's a risk premium that the investors are putting on mortgage rates right now because of the fact and the fear of if people are going to be losing their jobs, are they going to be able to pay their mortgage? So because of that, they're putting a premium on interest rates, and we are not seeing this price improvement that you see here being passed on to the consumer. So that's number one. To give you an idea of what that 2 million plus jobless claim, what that number really means, and the height of the recession, that most that we saw during the week was 600,000. So we're seeing potentially 3 to 4 times that later this week when they announce on Thursday. The other reason that we're not seeing prices improve right now as far as interest rates is because of capacity. We talked about that last week. Banks, lenders, they're all at capacity right now. They're having a hard time getting all these transactions through, everything that was coming in late February, early part of March. And so as they are trying to catch up, they're not passing on. They're trying to slow the amount of loans that are coming in by not passing on the price improvements to the consumer as well. So because of those two factors, markets are improving, but the interest rates are not. They're not being passed on to the consumer at this time. However, as the markets settle down, as we get this wave, as we clear this bottleneck of loans that we have coming through, we do potentially foresee that rates will improve down the road. So this is good for people who are looking at refinancing. Maybe they didn't have the opportunity to lock in the rate before, and people who are looking at purchasing a home. Obviously, everyone's situation is a little bit different. So if you guys are looking at purchasing or refinancing, I highly recommend that we schedule a time for us to chat, see how this affects you and how we can put together a plan to get through this market that we are currently in. If you guys have any questions, feel free to give me a call or email me. Phone number is 925-708-7178. Thanks so much. Talk to you guys soon. Bye-bye.